Our Canadian viewers would like to know what's happening with their banks, their 5 major banks. That includes RBC, Scotia, Bank of Montreal, CIBC, and Toronto Dominion. Let's get into it. This information is just data. There's no bias, there's no assumptions, presumptions, anything else coming through except real world data. You can determine what you want to take out of this. This is going to be a video about the loans that they currently have out versus the assets that they actually hold. When you or I want to borrow money, the bank does checks against us to figure out how much equity do we have, what's our credit rating, are we good for the money? You know, if we want to borrow money against our equity, like let's say a house, depending on our credit rating, we can get anywhere between 40, 50 to 80% borrowed to us against the equity in our house. But it's a little fishy when you look how much money that they've lent out based on how many assets they actually hold. And their assets are their equity, along with you paying them interest. So let's get into this. Let's see how these numbers may not match and what you think this means. Just so you can keep track of this, producer Mac is going to put the numbers and the banks up here so you can see a visual instead of just hearing me talk. First bank on the list has the lowest number of loans out there right now, and that is CIBC, to the tune of $520 billion worth of money lent out. Next on the list is Bank of Montreal with $550 billion of loans lent out. Add in there Scotia with $770 billion currently lent out. RBC, $827 billion currently lent out. Last on the list, Toronto Dominion, or more commonly known as TD Bank, $862 billion. This is an amount, roughly, quick calculations, top of my head, $3.5 trillion. We're going to write that really slowly so you can see how many zeros with 3.5 in front of it that is. If you want an idea of how big of a number that is, the total income tax collected by the Canadian government from you, from I, from us, from we, is only $270 billion in 2022. Are you starting to understand how big that number is? There's just under 35 million people in Canada, and the country only brought in $270 billion in revenue from income tax. Do I need to pause longer so you possibly understand how much money has been borrowed from just our 5 major banks? Now let's flash that 3.5 my brain is having a hard time saying trillion because I grew up and billions were problems. We're trillions of dollars in this equation. Let's put it up again. $3.5 trillion. Do you know what Canada's national debt is right now? It's under 2.3, and it's already caused the inflation and recession that you're seeing around you. These banks have lent out over $1 trillion more. Scared yet? Now, to their credit, if we're going to call it that, because, you know, credit and debit is actually different in the banking system. You might want to look that up. It's not the same way that we apply it to our lives. Let's talk about the assets that each bank holds. So we'll put all those beautiful numbers back up about how much debt in loans that they've lent out, and we're going to add right next to it what they actually have as assets. And I don't actually know how their assets are valued. Because if you even look at something like Blackstone or Silicon Valley Bank, when you found out that how they assessed their assets and gave value to their assets, of course their portfolios looked great. They overvalued everything and no one questioned it. So I'm not saying these ones aren't accurately valued, but just understand there's maybe a chance that when you self-evaluate your own assets, they might be just a little off the reality because no one's actually checking. If you're the financial institution, you can write any value you want. Convenient, isn't it? Bet your shareholders love that. But let's get into it, shall we? All right, back up at CIBC. They hold $205 billion worth of assets. I know I couldn't get a loan for over 2.5 times what I was worth. Wow, okay. I'll just keep that to myself. Bank of Montreal, $310 billion worth of assets. Scotiabank, $390 billion worth of assets. RBC, this one's actually not too bad. $815 billion. You can understand why their shares stay pretty solid. Toronto Dominion coming in at $517 billion. Are you noticing a trend? Are you starting to understand how financial collapses occur? One of the greatest assets that a financial institution has are its clients, its customers who put money into it, do their transaction through it. That's how they generate revenue for monthly fees, transactional fees, interest rates on everything that you borrow. What happens when layoffs and unemployment start hitting and people aren't paying that back? These assets are now devalued because there's no money coming in. So who knows where these assets actually are and will be rated? That's something for you to decide in your head based on what you're hearing. I suggest you do a lot more research. My personal question is I would love to have the books opened up to show how the assets are actually evaluated. Because when they give you their numbers and hope that you buy their stocks, their shareholders, board of directors, they're all happy to make money as it goes up. But what is it based on? What kind of information, and who is the authority and who governs how they evaluate their assets? So what myself and a lot of my friends and a lot of you should be asking is, who is it that is valuing these assets? Who is policing the appropriate value of these valuations of these assets? Because the people that invest in these banks, the shareholders, board of directors, people that buy the stocks, going by the news that's released, are we all being taken for a ride? Are we buying based on knowledge that is altered, fudged, exploited, we'll say? But who knows? These are just questions that I have and a few other people do. Let's leave it at that. So for Chris and producer Mac, we are out.